Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's take a look briefly on the gold market because not many things to discuss today. We have talked about this yesterday lots and explained what particular targets we have, what the scenarios actually exist. So on a daily chart, barely something has changed. Despite that, yesterday we've got information on the revision of the job market for just nasty 930,000 to the downside, which is actually was terrible. In fact, every second job that had been created during the Joe Biden second term, in fact, was fake. And that's might be the cold shower for administration of the Donald Trump. I do not actually believe that Joe Biden didn't know about that. That might be planned action just to put the responsibility on the common administration, because Joe Biden already saw that it is losing the elections, and actually it might be intentional initiative to do this, just hide the problems on the job market during his term. So anyway, whatever it was, you can see that gold market hasn't reacted on this too much, because as I said, in the gold market this is double deuce. Whatever it will be problems on the job market, that's great. Problems with inflation, also great, because Fed can't raise rates, and anyway nominal rates, real rates will keep going lower, in that support the gold. So that you can see this really very small reaction yesterday. I wouldn't be surprised if the reaction was mostly not due to the revision of the data, but just some technical issue in preparation for inflation report or something like this. So on a daily chart, that means the only thing that next target stands at the same 37-34 area. Market stands about previous target. Here we do not have any barriers except weekly overbought level, but overbought level is dynamic. It is not just strict line. It's more like some soft barrier that prevents market from acceleration, and at some point makes it to reverse and to show the more or less moderate pullback. Usually it works better when it accompanied with a big target, and that's why currently first our scenario is to see when the market will hit the 37-34 area and start showing the pullback that lets you to take the position on a better price. So some part or some variant of the same scenario is based on this recent thrust. So here we have the great upside momentum. This is perfect thrust for the Monopoly type of trades, but for any trade we still need the pullback. If somehow the pullback, by some reason, I don't know what particular might happen, but if we will get the retracement earlier, then market will reach this level. Anyway, we will act in the same way. So once it will reach some support area, first one is 35-36, we also consider chance for taking the long position. So first scenario based on the pullback. So we need to dip, then we consider it to buy. So that's the simple logic. About riding of this trend in this direction, this is more difficult, because you will have to take position without any clear patterns, just based on overall action. For instance, on the 4-time frame chart, you could try to catch the harmonic retracements. You can see they are very similar. Sometimes they are double side, sometimes it just the single side. Here is retracement half of this. So you just could try to catch something like this. So you can see the same retracement. You're trying to take position in the bottom of this harmonic swing, while market stands actually inside of the upper tendency. So if you take a look at the hourly chart, you can see the market actually stands inside of the channel, and you could try to buy with this channel until market hasn't reached the 37-34 target. So if this tendency will be broken at some point, well, you just will be out of it. But anyway, you will able to place a relatively tight stop when you're taking the position the next time. So you know this is lower border of the channel, you just take it. If market drop below it, your risk hardly will be very big. But the disadvantage of this approach that you take position actually based only on the direction and only on the channel. You do not have clear patterns, nothing just that could promise you more or less a good chance on upward continuation. You just believe in the overall tendency, and the market is standing to the target that stands above it. So that's it. In fact, outside of these two possible scenarios, I do not see anything else. So maybe you will find something more, but in the current circumstances, you could follow just one or another, but actually they are not mutually exclusive. You could, for example, trade the trend direction. Once retracement will start, you could switch your attention to the first scenario where we are waiting for a possible pullback. That, in fact, all that we could say on the gold market. Just let's see. Hopefully the coming inflation report will not bring too much mess in the technical picture.